Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Monday. We had a wild day today, especially after the past 3 weeks. We had an exciting month of January so far, and this week, is actually going to be a game changer, right? Either it could change the market so we continue with this open momentum, or we could see some bad news and things could really come down. But before I get into all that, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. So let's talk about it. Right? This week is a major week. Not only because of the FOMC meeting, which is on Wednesday, keep that in mind. Not only because of Tuesday, because we're going to get some meetings, so the Fed will be talking. Don't forget that on Tuesday. Not because of Thursday, we have the three largest companies reporting earnings. And not because of Friday, because we have job reports. It's going to be all of the above, right? So this week, y'all just heard we got something going on every day. Today is Monday, right? So we know today is Monday. It's already done. We saw the market come down due to a little bit of FUD, right? A lot of people are thinking that the markets ran way too high, way too fast in the month of January. We got 3 weeks. And I want to say tomorrow's the last day for the month of January. People think the market ran entirely too fast, especially with all the holidays in between on the month of January. This seems like we've had the most down days in the stock market this month than I've ever been through. Now, granted, we do this every year, but just seemed like a lot. So we got to realize a lot of FUD was in the market today, so we saw the market come back down a little bit. I believe that we could also see it coming back down a little bit more tomorrow until Wednesday, where things are really going to be a game changer. Wednesday and Thursday going to be the two big days that could really change the game, right? So Wednesday, we're going to get those interest rate hikes, and we're going to see the Fed Chair Jerome Powell come out and discuss how he feels the market's going and whether we should continue the interest rate hikes or whether the Fed is going to pivot. Now, you all know, we just saw my other video, right? People been saying 2023 recession. The economy seems to be doing better than expected, better than before. Maybe we already saw a recession. Maybe we're out of this bear market and we're going bullish, right? And I believe in the past, right, last year, we talked about this. Recessions are expected to last a year. We had a recession, not a recession, but a bear market is only expected to last a year. The market was down all of 2022, you all. All of 2022, bear market, bearish. So are we done? Are we ready for the new bull run? Those are questions that I feel like are going to be answered this week based on those heavy earnings and the Fed talk. So let's go ahead and take a look at the markets today before we go any further into those, because we're going to I think we're going to point out some key levels. We may do that today or we may do that tomorrow. I don't know yet, but we're going to talk about it. So today we got the Dow down 0.77%, S&P 500 down 1.30%, the Nasdaq down 1.96%, and the Russell down 1.35%. Now these are not bad, right? Y'all see SoFi, y'all know it's one of the ones I like. It's up off earnings. So far, earnings have been good. We saw Tesla beat last week. We see SoFi beat today. Now I want to say most of the companies that had earnings on last week actually beat, right? So we got to keep our eyes on that. But let's check out the year to date so far. Year to date, the S&P 500 is up 5% year to date, and that's after losing 1.30% today, right? Year to date, we're up 5.06% on the S&P 500. Nasdaq year to date up 9.69%, right? So that's from some of the lows that we were seeing before. You all know 20% recovery from the low. Let's see what the low is here. Let's see what we got. 20% recovery from the low means we are back bullish. So far, only 13.79%. Granted, that was from last year, but that is the most recent low. And I'm assuming it's probably very similar for the S&P 500, right? So let's find that low about right here. Let's see, right here, right? Up 13.42%. So very close, very similar. 13% up so far on S&P 500 and the Nasdaq. So far from those lows. 7 to 8 more percent up, and we could potentially be back on our bull run. Now that is what I'm hoping for. That is what, and pay attention to my words. That is what I am hoping for, based on the things that I think are going to happen. Right, especially this month, I do think that we could see some rough territories, a very volatile week before we actually see what's going on. I don't know if you all pay attention to it, but I want to say a week or 2 weeks ago, we actually traded very sideways for a week. We saw the market shoot extremely high. We saw it come all the way back down and trade flat. We saw it go way low, come all the way back up and trade sideways all day. This happened pretty much for a week straight. So those are the type of things we got to pay attention to. Although it may seem like we got a heavy spike or a heavy dip, the market always seems to redeem itself back to those flat levels. Even today, we saw the market kind of just go, crazy. Look at it. Went way up, then came back down. Now, granted, it did trade lower today, but it's still not that bad. It's not all that bad, especially seeing that this month has been a great month. Now, let's talk about one of the big dogs, Tesla. Y'all got to look at this. Tesla up 54% year to date. That's in a month. Those earnings took this joker off, y'all. Earnings took it off. Up 23% based on earnings alone. Now, granted, even then, before that, it was up 33%. But earnings alone took Tesla up 23%. And we saw it come down today just by about 6%. And Tesla does that. Tesla makes big moves like that. It is a big dog in the industry, in my opinion. But I think that it is going to set the standard for the rest of these big companies that are presenting earnings this week. So since we keep mentioning earnings, it's one of the top dogs, right? Let me go ahead and pull it up for y'all. So today is already over. Hopefully you all, I don't really see any money making opportunities in any of these. But if sorry if I made you miss out. Besides SoFi, that was one for the day. It was 12%. I want to say 12% up. We just saw. Tuesday. So tomorrow we got ExxonMobil. Definitely one to be checking out. UPS, maybe. That's it for Tuesday. Wednesday we got Meta. Y'all know Meta is a big dog, a market mover. I don't know how it's going to do, especially seeing that it has gone both ways in the past 2 earnings. So I don't really know what to expect from it. Thursday. Thursday is the day to keep up with. Look at this. Amazon, Apple, Alphabet. Alphabet is also Google. 3 big dogs in the aftermarket on Thursday. If all 3 of these companies come in and do good, come in hot, you all can expect the market to rally like crazy on Friday, despite the job reports, I believe. Now, granted, the job reports can make things come back flat, but I do think that if these 3 do well on Thursday night, the market is going to go crazy for the next weekend. We're going to see a continuation of the bull run that we're currently in. So hopefully, just like we saw a bear market all of 2022, I'm hoping to see a bull market all of 2023. But again, the odds are not in our favor. The odds are not in our favor. So y'all go ahead, take a moment, get your screenshot. Take your screenshot, right? Amazon, Apple, Alphabet, all on Thursday night. You can do your YOLO play if you want to. I myself, I may consider it because I really fully expect these big dogs to come in doing well with the exception of Alphabet. I'm not sure how it's going to perform, but I do expect Amazon and Apple to come in with better than expected earnings per share. So that's just what I'm thinking right now. I'm going to continue to do some more research because y'all know that's the name of the game. But if we find something worth talking about, I'm definitely going to play that role. Okay? So next, we already know. We already looked at this. One thing I do want to talk about is oil prices, right? We're talking about this inflation, recession. That's what the Fed are going to be coming to us about. I've been seeing prices of gas at the pump go up, but I'm seeing WTI crude oil and Brent crude oil actually coming down from the last time we looked at it, and prices aren't really extremely volatile. So I don't know if that's going to affect inflation negatively. And I also told you we had 2 positive quarters of GDP, which should say inflation may stay about the same, flat, come down just a little bit, but not too high and heavy because the economy is doing well, right? Meaning we're still selling product, goods, and services and all of those things. I think it's going to be the job reports that's really going to make a difference for the Fed and just seeing how they feel. Right now, our fear and greed. So the last Friday, we had a 69. We were almost in the extreme greed. If it wasn't for today, we pulled back to 67. But we were getting close to the extreme greed, you all. When we hit that extreme greed, it's some money to be made on the upside. Green days mean call options. Red days mean put options, right? Green, call, red, put. So hopefully you all made some money today too. Because it wasn't just too extremely volatile. There was definitely money to be made to the downside. a lot of money to be made to the downside and a little bit of money to be made to the upside in the early trading hours. But hopefully you all made some money, and really we expecting to see that. But those are the things that we really just that we depending on for this week. We got the man again. I'm gonna say it again. I'm gonna go day by day. Tuesday, the Fed is meeting. They're gonna be discussing, talking about things. Wednesday, we actually have the FOMC meeting on top of earnings all this week. You all don't forget that. Wednesday, we have the FOMC meeting. They're going to give us the interest rate hikes, and the Fed, Jerome Powell, is going to tell us his feelings about the next coming hikes, right? Is he going to continue to do this thing? Is the Fed going to pivot, or are they going to put a pause on interest rate hikes for the next few months? We shall see on Wednesday. Thursday, the three biggest dogs in the stock industry, Amazon, Apple, and Alphabet, are going to be doing earnings, and these are things that could move the markets whether to the upside or downside. It could actually provide some mixed emotions as well if they don't all perform about the same, right? So Thursday, big dogs. Friday, job reports, jobless claims are coming out, so we could definitely see a lot of volatility this week. If you all are trading, make sure you're in some safe trades, because I myself, Wednesday, I'm probably gonna sit out. I'm definitely not gonna probably make too many trades, maybe one. Early part of the day up until the meeting. After the meeting, I'm out of there. Before the meeting, I'm out of there. So, but for sure, around that time when he starts talking, I'm not touching the market. I'll be watching and listening. Maybe you all can watch and listen with me, and we'll have something to talk about on Wednesday night. But for now, that's all I got for you guys. Hopefully you all enjoyed the video. Make sure you like, subscribe to the channel, hit that notification bell, and I'll see you guys later.